Well, look at that, folks. I posted this on X here today. Public count, new all-time high, well over $3.6 million. Congratulations to everyone out there hitting all-time highs. Let me be very clear, everyone watching this, your portfolio should be very, very close to an all-time high or at a new all-time high right now. Absolutely amazing to see this. Now, a lot of people think like what happens after all-time highs? Do you expect to then go down a bunch? Here's the deal. You should expect to hit new all-time highs after you hit all-time highs, and then new all-time highs and new all-time highs. And like 70% of the time, I would say, you should expect to hit new all-time highs in your portfolio or be very, very close. Let's call it within a few percent of a new all-time high. About 20% of the time, you should expect to be down like a decent amount. Let's call it like 5 to 10% from your all-time high. And then 10% of the time you should expect to be down huge. And even if we look at the past 3 years of the public count, we're going to see this exactly play out. If we go back to 2022 into very early 2023, right, portfolio was down a lot from all-time highs. Then we started to come back very nicely. So we were only like down a decent amount from all-time highs. Then we kind of got really close to all-time highs and then busted through all-time highs, right, into new all-time high, new all-time high, new all-time high. Then we had what happened in the springtime, right, of this year, where we were then down like a decent amount, and now we're at new all-time highs, blowing through those again and again and again. So after you hit all-time highs, expect new all-time highs, okay? Now, with that being said, I got 5 stocks that I absolutely love, that I am buying now, that I think are great deals, and I want to share those stocks with you here today in this video and why these are phenomenal opportunities in my personal opinion. I do these videos for you guys each and every month where I cover some stocks that I think are phenomenal buys. And I know, with new all-time highs, people are like, you still buying stocks? Yeah, I was buying stocks literally today, okay? Appreciate y'all joining me as always. One thing only I need from you guys, smash a like on this video. I hope you guys appreciate this. It's a holiday weekend and I'm doing this video for you guys, so I appreciate you joining me. And if you want to be subscribed here to the channel, you can certainly subscribe. That will be down there somewhere. You can subscribe to the channel if you're looking to do that. Additionally, I'm going to make early access for you guys. We have the link. I will put that as a pinned comment for the 4th of July sale for 1000xstocks.com. You probably heard me talk a lot about this recently. The sale is like officially tomorrow, but I'm going to give you guys early access, everybody that's watching this video here today. So that will be the pinned comment down there. And when you join us in there for that deal, you will get your 1000x Steel membership card sent to your house. Ooh, this baby's so nice. You could put this in your wallet, bust that out. It's better than an American Express Black Card, okay? Now, in regards to this, we have 2 different tiers here, essentially. One is $49 a month. That's usually $99 a month. And the other tier option is for 3 years access, $1,500. That's usually $3K for 3 years access to 1000X. So, whatever you want to join, if you're, more committed to it and you've got, decent amount of money, this is a better option. If you're a little tighter on funds, this might be a better option for you. Now, everybody that gets a deal, I want you to start with the education section first. The basic education, advanced education, before you go crazy with all the features and all the software and all that stuff. I need you guys to make sure you understand like what's going on there. Read through all the definitions. I have everything explained to you, how everything works, why this term matters, how you calculate this and all those things. So before you go and have a blast with the software, do the education portion first. The boring part, okay? How to value a growth stock. That's going to be really important when you guys go to run your valuations and trying to figure out, is this a great deal on a stock or a bad deal? Watch all those videos, income statements, balance sheets, or not videos, I should say. Read through all those curriculums there. Very important you do that. Then go crazy with the software, okay? Alrighty, guys, appreciate you. That will be the pinned comment down there here today. Enjoy that sale, and it's well worth the price of admission, because we know, listen, you make bad investment decisions in this game, you're talking about you're losing a ton of money. You miss out on great stock opportunities, there goes thousands, tens of thousands, hundreds of thousands of dollars, or in some cases, millions of dollars right out the window, okay? Alrighty, guys, first stock of these 5 stocks. Here we go. So, this is the past 5 years of this company's trailing 12-month revenue. Now, what do we see from this company? It goes up and up and up and remarkably consistent. It's a company that you can just basically count on growing revenue time in and time out. It's unbelievable how solid this company is. Now, we're looking at 1000xstocks.com here. Look at not only the revenue trend this company's been on, but look at what is expected to happen for this company based upon analyst expectations here. What a banger. Like, if you look at this revenue chart, like this is like the perfect stock. Like this might be the most perfect stock in the history of mankind. Like this is unbelievable. How many companies can you count on quarter in and quarter out, year in and year out, just growing at a solid clip? Additionally, look at the earnings per share. This is where we're at for this company's earnings per share. And this is what is expected to happen for this company's earnings per share over the next many quarters here. I just showed you all that. If that's all I gave you, how much do you think this stock would be up in the past 5 years? We know it consistently just grows and grows and grows. We know the earnings per share is expected to take off like a rocket ship here. We know it's just going to continue to grow for this company. I would say this stock's probably up anywhere from 50 to maybe 200% in the past 5 years. That would be my guess. 50% on the low end, kind of midpoint of 100%, probably doubled up over the past 5 years. Maybe it's up like 200% or so. Well, be prepared to have your mind blown. This stock is not up. It's down 12% in the past 5 years. And the company is named Adobe. ADBE on this one. Unbelievable to see that this stock, regardless of its great performance, is down 12%. Now you may say, well, maybe the company is getting majorly disrupted right now. Well, you know how we can see if that's actually happening or not? We can look at the latest numbers that this company just came out with not very long ago. Here's what happened with the company. The company on a GAAP basis had revenues go up 11% year over year. On a non-GAAP basis, revenues were up 13% year over year. Look at the earnings per share of this company. Non-GAAP EPS of $5.06. GAAP EPS of $3.94. Folks, let me ask you a question. Very important question. Does this look like a business model in decline to you? The answer should be, and it shouldn't take a rocket scientist to figure out this one, or a business genius, or somebody who's been in the market for 16, 17 years like myself. No, that does not look like a business in decline at all. Actually, it's a business in phenomenal financial position. Now, in regards to Adobe, you're going to understand they have 3 segments of customer that they attract very well. One is business professionals. They do a great job of attracting those folks. The second group of folks they attract to a lot of Adobe products are creatives. So think about people that do a lot of posting on Instagram, TikTok, YouTube, right? The whole influencer economy, all that stuff. High probability folks like that use at least one of Adobe's products, if not several. And the third group of customers that Adobe has are marketing professionals. If you're run any sort of marketing department for any large company, mid-sized company, or even small business, high probability you use Adobe. And so they have a phenomenal customer set, and they're just very ingrained with those folks, and they're doing phenomenal work when it comes to their AI products and everything like that. Now, here's the deal with Adobe. I showed you the revenue, I showed you the earnings per share and what's expected here, I showed you the latest numbers, but here's the deal. If you're truly a great company, you should be able to come in and beat analyst numbers quarter in and quarter out. Not many companies can actually do that though. Look at Adobe. 10 straight quarters of double beats. A double beat is when you beat on earnings per share and you beat on revenue. How many companies in the stock market have beat analyst expectations on a double beat 10 straight times? Not very many. That's legendary. If you could do that 10 straight quarters, legendary. And that's what Adobe has done here. So Adobe is a company you can trust coming in and beating revenue expectations and earnings per share expectations almost every single quarter. And I mean, heck, literally over the past 10 quarters, they've done it every single quarter. That's very comforting feeling. That means the management team knows what the company's going to do. It's not just like we're winging it. It's very consistent. This is like what you would expect from Microsoft, right? Like Microsoft's one of those companies, just solid. They should come in and beat numbers every single quarter. And that's what Adobe does. No, additionally, we looked at the revenue, so consistent for this company. Unbelievable, right? But additionally here, look at the gross margins of the company. The gross margins of the company are right around 90%. I mean, how many companies have gross margins, let's call it high 80s to around 90%? Not very many companies. That's legendary. Additionally, look at the gross margins of this company. They're right around the 30%-ish range, which is your top tier, one of the best companies in the world. If you can have your net margins being around 30%, legendary, okay? Now, this is a very important graph you're not gonna see many people talk about, okay? What I'm showing you right now is operating income. Now, operating income is extremely important to always look at this for what a company's doing operating income wise. This is going to give you a good understanding of how much money is the company actually making, bringing in through the door, and actually being able to keep around, right, after operating expenses are taken out. And here's the deal. This company's operating income is ridiculous, and it continues to build, and it's going to continue to build over the next several quarters. Now, with this operating income, they can take this and do share buybacks, right, which is going to help your earnings per share over time. They can pay out dividends. They can buy out businesses, other companies with this, right? And so their operating income is incredible at this company and continues to build for the company overall. Now, let me show you my bull case, base case, and bear case for Adobe. And you're going to begin to understand why I love this stock so much right now, and why it's, in my opinion, like a steal deal buy right now, and why I was actively buying this stock today. I was buying Adobe stock today, and I plan to continue to buy this one for a while. My bull case for Adobe has them growing revenue 12% per year. Now, on a non-GAAP basis, they just grew actually 13%, but even my bull case is under that. So my bull case has them growing revenue 12% per year. I have them doing net income growth of 14% per year, so just a little eclipsing the revenue growth here. Net income margins of 37% come 2029. Now, if they're growing 12% top line, 14% bottom line, SaaS-related business, recurring revenue, a 30 to a 35 P is very fair for this company, which puts the stock price in 2029 between $952 and about $1,100 plus dollars. The stock today is in the $300 range. This would give me a compounded annual growth rate of 26% on the low end and 31% on the high end here for Adobe. But let me show you my base case. My base case is just a fancy way of saying that's just what I expect. Okay, my bear case is like if things go better than I expect. My bear case, my bull case. My bull case is I expect things to go better than what I have here, and my bear case is like I expect things to go quite a bit worse than what I have. But this is what I personally expect to happen for Adobe. I think they're going to grow revenue 10% per year on average, 2026 to 2029. I think they're going to grow net income 12% per year on average, 2026 to 2029. I think their net income margins will get to 37%, and I think they'll be able to easily command a P ratio between 28 and 33, considering it's a low double-digit grower, right, in a consistent business model that grows year in and year out, right? That puts the stock somewhere between about $820 and right under $1,000 a share come 2029, which gives me a compounded annual growth rate on the low end of 22% and on the high end of 27%. Now that is special, because not only is it like a great money-making opportunity, but here's the deal. This is a situation where I'm not even taking a big risk in this stock. It's not like this is some crazy business model that's on shaky financial ground. This is like one of the best income statement, balance sheet, cash flow companies you're going to find in the world, and one of the most consistent business models you will find in the world. And it's extremely sticky, and it keeps people on the recurring plans. Like, it's a holy grail business model. So if I can get on my base case a 20% plus compounded annual growth rate, I'm going to take that every day of the week. And that's exactly what we have in regards to Adobe here, right? Now, let me show you my bear case. What if things go far worse than I anticipate? This is always important. You guys always have to, it's one thing to be like, oh, I'm so bullish on the stock. I think it's going to do so well, blah, blah, blah. You need to run a bear case before you make any investment in any stock, ladies and gentlemen. There's a reason on 1000X I have it so you can do your bull case, your base case, and your bear case all together. Because if you're not running a bear case, then you're not taking into account the risk. So what happens if this company grows way less than I anticipate, right? I had that scenario. So in my bear case for Adobe, the company only grows revenue 6% per year. This would be disastrous. Remember, on a non-GAAP basis, they just grew in this last quarter 13%. So we're talking over 50% decline in growth rate, right? This would be horrible for the company. 6% revenue growth on average, 2026 to 2029. Net income growth of only 8% per year, 2026 to 2029. That would not be good. Now, if they're only growing 6% top line, 8% bottom line on a SaaS-related company, you're going to probably put a 20 to 25 P ratio on the stock, which puts the stock $511 to $639, which gives me a compounded annual growth rate, ladies and gentlemen, of 8% to 14% under a bear case. Under a bear case. Now we could take these numbers down even further. We could say only grows revenue 4%, only grows net income 6%. We could make it like insane super bearish case, right? And even in that case, I still wouldn't actually lose money in the stock. The only way I could lose money really in Adobe holding the stock over the next 4 or 5 years is in a scenario where their revenues literally decline, like they start literally going down, like revenues shrink. And is that at all realistic for this company? It's very unrealistic. All things are possible, but that I would put at like a 2% probability of like, what are the chances Adobe's revenues go negative over the next 4 or 5 years? Literally, I'd put that at like a 2% probability. That would be insane. So the moral of the story is here in regards to Adobe is this stock is a screaming buy. When I can run a bull case, bear case, and a base case, and all of them I make good money, and when my base case has me getting a compounding annual growth rate of 20+%, I'm going to take that bet every single time, right? And especially when it's this consistent, a business model this good. And let's also not forget, you're buying a company that has a CEO, right? And the CEO, he's done a phenomenal job leading this company. He's been leading the company for, oh gosh, easily 15+ years now at this point in time, if not pushing closer to 20 years. And he's done a great job running this company and getting them through all these different time periods and keeping the company relevant in all the different technology changes, right? And taking Adobe into a subscription business model over the years. Like, he's done a phenomenal job pivoting, understanding. They got an amazing employee force over there at Adobe that continues to innovate. So, you know, the moral of the story is here in regards to Adobe is they look good. And also keep in mind, they are one of the beneficiaries of AI from a perspective of bringing in new people to use their new AI products, but also from likely the development standpoint. They're going to probably be able to save a lot of money over the next 5 or 10 years in regards to software engineers, because now a lot of AI is being able to write code. Their software business model, right? So do keep that in mind. And that's why you should expect net income margins to increase over the coming years. So gross margins could stay flattish, somewhere around here roughly, but net income margins could continue to go up quite dramatically over this next 5 to 10 years. While revenue increases, while earnings per share increases. It's good, man. I like this one a lot, okay? Stock number 2 of these 5 stocks up here is Nike, NKE. This stock is on a ripper rally, folks. 24% this stock has gone up just in the past month. Nike's on an absolute ripper rally. I know people thought this stock would never go on a run. Oh, the run has started, folks. The run has started. Now, I've talked a lot about Nike recently. If you want to hear me talk more about Nike specifically, watch this video I put out 5 or 6 days ago. It's called "This Stock is Next Up to Fly." I'm coming back. I was actually still in Mexico at this particular time, okay? It's got 137,000 people have watched it so far. If you want to hear me talk more about Nike and what's going on with Nike, watch that video. Very important video to watch. Additionally, just yesterday I did a video, looks like 77,000 people have gotten to watch it so far, on the reaction channel. That's a beast video. It covers a lot more than just Nike, but I also discuss Nike for a bit in that video as well. I do not discuss Nike as much as this video, but I discussed it a pretty decent amount. So, you know, the reaction channel is called Jeremy Lefebvre Makes Money. We're almost at 100,000 subscribers on that particular channel. So once again, if you want to hear me talk Nike, watch those videos, the main channel one and that one, okay? Alrighty guys, next one up here, stock number 3 of these 5 stocks is AMD. Holy smokers, this ain't no jokers. Listen, AMD's up 41% in the past 3 months, and it's still a buy. It's still a buy. I know it's a big move. It's still a buy. The thing you got to understand, okay, is when you start learning anything about investing, about money, very early on you get brainwashed. And the reason you get brainwashed is they tell you, buy index funds, you're going to make probably about 8% on average per year. So right off the bat, your mentality has this 8% number drilled into your head. And it's been like that since I started learning about finance and investing and business back when I first got into college in 2008, right? It's still like that to this day. Whenever you start learning about finance, money, they're going to say, index fund, S&P 500, make about 8% per year. So that's what you think. So when you all of a sudden hear about a stock goes up 40% in 3 months, you think that's insane because you're like, that's what you would make in an index fund over 4, 5, 6 years. And that stock went up that much in 3 months. That's insane. Like, that's crazy. Like, what are we talking about here? Like, you got to sell it, right? The thing you got to understand about this, okay, When it comes to individual stocks, when you own a great company that increases their revenues dramatically over the years, their EPS dramatically over the years, their stocks usually run massively, massively. And what I show you here, this is a top 20 performing stocks in the S&P 500 over the past 5 years, 10 years, 15 years, and 20 years. What do you find? If you look at the past 5 years, we got countless stocks up hundreds of percent and some stocks up 1,000+%, right? Now we take that over 10 years, and what do you see? Every single stock is up more than 1,000%. And some stocks are up 2,000%, 5,000%, nvidia up 32,000% in the past 10 years. Now we take it over 15 years. What do you find? The worst performing of the 20 stocks in the S&P 500, right, of the best performers, the worst one, number 20, is a company named Eli Lilly. That stock is still up 3,300% the past 15 years. And some stocks are up 10,000% plus. Look at this boring company, Texas Pacific Land Corporation, up 13,000%. Look at Tesla Massa up almost 20,000%. Look at nvidia up 67,000%, right? Then you can take it over 20 years and we go to a whole new level, right? Now the worst performer of that 20 is Domino's Pizza at a 4,200% gain. So what you realize is 40% is nothing. Nothing. Let me show you a stock that I bought many years ago and I sold it very shortly after, and I look at it now because I think I made like 40% on it very quickly, and so I sold out of the position completely, and I was like, dang, I just made a lot of money really quick, and I regret it immensely. Let me show you that stock. Here we go. What you're looking at is a company. I'm going to tell you the name of it in just a moment. But basically, I always wanted to buy this stock. Always wanted to buy this stock. I'd done some more research on it. I'd seen the stock flying and flying and flying for a while. It went on a great run. It was actually brought to me by somebody I taught the stock market to back when I worked at Quick Trip. And I didn't quite get it at that time, but as the years ticked on, I got to see what the company was doing. I was like, oh man, I want to get in this company at some point in time. I just didn't have the right time. But then the 2018 happened, and the stock market just went through a crazy end of year crash essentially. And we were on pace in that December to have the worst December since the Great Depression. It was unbelievable, really. And so all the tech stocks are getting obliterated, and this particular stock fell about 50%. And so I bought the stock. I bought it actually in the public account, if I remember, and I might have bought it in some of my private portfolios as well. Well, that 2018 situation ends, and market just kind of rips higher in early 2019, right? And a lot of these tech stocks come back. And next thing you know, I'm sitting on a huge gain on that stock. I think I made like 30 or 40% in quick, in a matter of months, right? So I'm like, dang, that was really good. I made a lot of money quick. And I said, man, I made so much money, you know what? Let me take my profit on this. And I sold out of the stock completely, right? And I kind of felt good shortly after, because then the stock started going down again. I was like, oh, good move, Jeremy. You got out at the right time. Well, look at that stock. Stock is called nvidia. This is where Jeremy sold out his big profit. Good job, Jeremy. You sold your big profit right there. And look at where the stock is now. When I say 40% is nothing in a great company, 40% is nothing in a great company. These companies, if they've got 5, 10, 15, 20 years of strong growth ahead of them, 40% is nothing. I tell you that. And I show you the data behind it, and you really start to realize, oh, dang, it's not. But once again, when you're brainwashed about this 8% number, and that's ingrained in your head, oh, make 8% per year in an index fund, you think 40% is insane. You're like, oh my gosh, it's all the money in the world. No, it's not. It's not, folks, okay? Now, here's the deal with AMD. So AMD, in my opinion, is the next up to join the $1 trillion boys club, I call it, okay? There's a $200-ish billion market cap as of right now, $137 stock. There's no doubt in my mind, seeing the AMD roadmap and where this company's headed over this next 5 years, that they're going to get to that $1 trillion boys club. It's just a question of, do they reach it in 2026, 2027, 2028, 2029? That's really the only question for me in regards to AMD at this point in time, okay? Now, for the company, MI350 is the first, and that just went into production here very recently. This is their first big product that is really putting them on the map AI-wise. The first series of MI300 series, okay, getting a little started, but the 350 is such a huge ramp up versus the 300 that this is the first time you're going to really start to see the numbers pouring in a major way. MI400s blow the top off. Okay, the MI400 numbers are going to be unreal for this company. And Lisa Su's been talking recently about like a 10x performance jump versus the MI300 series they were just showing off, last year or whatever, right? So, I mean, this is like a night and day difference, and the MI400 orders are going to be insane. I think AMD is going to be able to get big money for those chips, and they're still going to be able to undercut NVIDIA's pricing. So that's a great thing, is they're going to get crazy money for the MI400s, in my opinion, and they're still going to be way under NVIDIA's price. That we'll see if that plays out, but that's exactly what I expect to play out, seeing kind of AMD's strategy here. So it's like, literally AMD is like in the perfect position because NVIDIA's gone so insane with their pricing on their AI chips. AMD is going to be able to come in with their phenomenal chips and just undercut in a huge way. That doesn't mean NVIDIA is doomed or anything like that. So don't think like, oh, NVIDIA is a great short or something like that. Like NVIDIA is going to continue to put up very good numbers. It's just AMD is going to be able to grow immensely because AMD put these pricing so ridiculous that now AMD is going to come in with super great performance and be able to show you, here's what we can offer you, but it's going to seem cheap. It's going to seem cheap to all these big AI companies, the Metas and the Googles and, all these other companies, Microsoft, all these companies, it's going to seem cheap to them. They're like, oh my gosh, I can get this sort of performance for this price. Like, and AMD is going to be sitting there like, oh my gosh, like we're going to be making more money than we ever thought possible. And then after the MI400 series, we're going to have the 500 series, which will just build on the 400 series. You won't hear a lot about 500 till we you probably start hearing about 500 series. My guess is late. Probably second half next year, in my opinion, because right now we're all 350, and then everybody's going to be talking about 400 in 2026. So 500 maybe the end of the year or something like that, or maybe that's a 2027 thing. No, this is like video I showed my kids. I think it got suggested to me on Instagram or whatever. Right, Carlos Sainz, F1 driver, he's driving go-karts, and they start him in last place, and by the time the race is over, he's like in the front. That's AMD. Let's just call it what it is. NVIDIA got way out in front of AMD, but AMD is playing catch up in a very quick manner. And it's to the point where AMD is like, I would call it right under NVIDIA now at this point in time. I still would say NVIDIA's in first place, but AMD is not that far behind now at this point in time. Whereas if we were to go back like, 2 years ago, it was like AMD was so far off the map, you couldn't even see them. Then if we go back like a year ago, it was kind of like right here. Now at this point in time, I would put it kind of like here, like NVIDIA's here, AMD's here. And so, I'm not expecting AMD to pass NVIDIA because they don't actually need to. But I just expect them to stay very, very close, and that's going to mean phenomenal things for AMD's business model here, right? Now, AMD, I spoke about this one very in depth. I think this was an exclusive AMD video here, 35-minute long video about AMD. If you want more AMD talk, check out that video from a couple weeks ago, biggest development in 10 years. I put that on the thumbnail there. You'll definitely want to check that one out. Now, here's the deal. This is my position in the public count. We're up $67,000 in the stock now at this point in time. It's a $350,000 position. I also own a bunch of AMD shares in my other portfolios as well. I'm not selling anytime soon. Like, I would not be shocked. It's a $137 stock right now. I would not be shocked at all if this stock's 200 plus this year. Not 10 years from now, not 5 years from now, not 7 years. I'm talking this year. I would not be surprised at all if this stock goes 200 plus. I think the guidance next quarter, which that quarter's going to be out probably in the next 30 days. For sure in the next 30 trading days, in my opinion, that next quarter will be out. I think their guidance is going to knock people's socks off. I think it is. I don't think people are prepared for what that guidance number is going to be. And when people get wind of what that guidance is, and then they hear the conference call and Lisa Su's confidence, I think it's going to be a mob to get an AMD stock. And it kind of already is. And then I think 2027, the stock, worst case scenario, is probably 300 plus. But this stock could be a $500 plus stock by 2027. Like if this 350 sells away, I think it's going to sell, and then that 400 goes insane, like I think it's going to go insane, and the price they're going to be able to get on that 400 series, just wait to see the price they're going to be able to get on that 400 series. We could be talking about a $500 stock in 2027 and 2028, right? So keep that in mind. I really like AMD. Stock number 4 of these 5 stocks up here is Cheesecake Factory. This one's on a year-long ripper rally. 67% the stock is up in the past year. Here's the deal with cake. If you've been watching my channel for the last at least year, You've heard me talking religiously about Cake. I've been talking about this stock for at least a year, if not a year and a half now at this point in time. Talking about how great of an investment opportunity this is. Like, I'm buying every share in sight, and it is proving to be a very wise financial decision for me to be buying every share in sight of this stock. It's performing tremendous for me, right? I was buying Cake shares here today, not in the public account, but I bought it in another portfolio today. And this speaks volumes because this stock I'm up 61% on. I'm up $80,000 in the stock, doesn't include dividends received in the public account, and I'm still buying shares today, which speaks volumes to, and look, I have shares I'm up over 100% on. For me to be buying on a stock that I'm already up 100% on some of my cost on, I have to be extremely confident about where this company's headed in the valuation. Now, when it comes to Cake, here's the deal. They have their traditional Cheesecake Factory business, which is a straight ATM machine, one of the most successful restaurant concepts in the world, right? They do crazy volumes there, make a lot of money. But the exciting thing about Cake is their two growth concepts. They're going to be just building massive amounts of locations every year for like the next decade. That's North Italia, and that's Flower Child. Flower Child's even a bigger opportunity than North Italia. They've already basically announced they're going to be expanding both those concepts around the whole United States over this next, we can call it 5 or 10 years, essentially, okay? Then they have several concepts coming behind theirs, like Culinary Dropout, Blanco, and many others that are in testing phase. And they're basically testing multiple locations in different cities right now and trying to see, which one's going to be like the next North Italian, next Flower Child for that next crazy amount of growth essentially ahead, okay? Now, when it comes to understanding when a company has two basically guaranteed hits, it's huge. And we haven't really seen a company that had two basically guaranteed hits that they were going to be expanding all over the United States of America. But if you can even have one, it's a huge deal for you in the restaurant related space, right? Chipotle is a great example. Chipotle, 2006 all the way to 2015. Here's the deal with Chipotle. You buy every rally of that stock, you buy every dip of Chipotle, and you buy everything in between. And the reason being is you could see that company, and keep in mind, Chipotle traded rich along that time, but at the end of the day, like everything was a buy in regards to Chipotle for that whole 9 or 10 year span, because you could see Chipotle is going to be expanding massive locations across the whole United States over this next 10, 20 years, right? That's the same exact thing we have with North Italia and Flower Child. You can see they're going to be just expanding locations for the next 10, 15 years there, right? If you look at Starbucks, from 1995 to 2015, you buy every rally of that stock, you buy every dip of that stock, you buy everything in between. Because it was obvious to see Starbucks is a big hit, and they're going to be expanding locations all over the United States and maybe even the world over time, right? And that proved to be right. McDonald's, same exact thing. McDonald's 1997 to 1995, they're opening McDonald's every city you could possibly imagine in many, many locations. So it's very obvious that you buy every rally at McDonald's during that time, you buy every dip at McDonald's, you buy everything in between. Because it was look at how many locations they're going to be able to add. This is the future, right? This is what people want to eat. They want to eat these cheeseburgers for cheap, 50 cents, right? Boom. That's what you do with these great restaurant concepts. Texas Roadhouse, another perfect example, 2005 to 2025, right? You buy every rally of that stock, you buy every dip, and you buy everything in between, because it was obvious Texas Roadhouse has a banger concept. They do great volumes there. They're very profitable, and they're going to be expanding in every big city out there. And they've done that, right? Now you can go to just about every major city in the United States of America has Texas Roadhouse in it. And some cities have multiple locations, right? So that's what you do when you have an opportunity like this, and this is what we have with Cake. We have not one, we have two basically guaranteed concepts to be in every major city with likely multiple locations. What do you do with Cake? You buy every rally, you buy every dip, and you buy everything in between for the stock, right? Now, the most amazing thing about Cake, because, my opinion is because the name is called the Cheesecake Factory, people don't even know that Flower Child is this major growth engine and North Italia is, right? They probably just think it's just the Cheesecake Factory we're buying, right? Oh, I don't want to buy that. They already got locations everywhere. You pretty much have them. No. So the best thing about Cheesecake Factory is it doesn't trade like you would expect a company with insane growth over the next 10, 20 years to have. It trades at a forward P of 18. It's the most perfect situation I could ever imagine is basically what has happened with Cake. It hasn't even priced in any of the growth. It hasn't priced in next year's growth or the next year's growth, and it hasn't priced any of that in. That's the most beautiful thing about this stock, and that's why I keep buying every share in sight of this stock, because nothing's priced in. Like usually if you could have even one banger concept, the company's going to be expanding all over the United States, never mind two, you would expect this company to probably be trading at a forward P of 35, 40, 50, somewhere in there. 18? Oh my gosh, it's the ultimate situation here. No, the other beautiful thing about Cake, they pay you out dividends, so they pay me 27 cents for every share I own every 3 months. So think about all the many thousands of shares I own across my different portfolios, and I'm just receiving all this dividend income. I can go buy more Cake shares with that. I can buy other stocks. It's beautiful, right? So I don't have to worry about selling my Cake stock to make money. Cake's going to pay me dividends every 3 months, which is beautiful. I take that money and then I can go reinvest it in more Cake shares or buy other stocks with it. It's unbelievable, right? And then just imagine the dividends Cake will be able to pay out 5 years from now, 10 years from now. Think about how many North Italias they'll have 5 years from now. Think about how many Flower Childs they'll have 5 years from now, and some of their other concepts. Can you imagine the earnings per share of the company then? Can you imagine the dividends they'll be able to pay out 5 years from now? Now let's go 10 years from now. How much more profitable is a company 10 years from now than they are today? 2x, 3x, 5x, 10x more profitable? I can tell you it's a lot bigger than where they're at right now. Imagine the sort of dividends they'll be able to pay out then. Imagine how many shares they'll have taken off the market, how many share buybacks they'll have done over the next 5, 10 years. Oh my gosh, man. It's just an incredible, incredible investment opportunity. So I love Cake, and that's why you see me just buy, buy, buy. Next one up here is, number 5 of 5, is Wynn Resorts. It's been a long time since I could call them Winning Resorts once again, and yes, there are Winning Resorts. So Wynn Resorts, stock is up 34.5% over the past 5 months. It's on a ripper rally now at this point in time. Love Wynn Resorts. Obviously, I live in Vegas. I know Wynn properties very, very well. In regards to Wynn, I spoke about that one pretty extensively in this video here. I even showed you updated photos of the property they're building in the Middle East right now. What an incredible property in the UAE they're building. I showed you updated photos in that video. So if you want to hear me talk more about Wynn stock, check out this video. It says this stock is up next. Yeah, it looks like 119,000 people have watched it so far. Definitely worth checking out, okay? Listen, folks, earnings season's coming. It's right around the corner here. Stay focused on the long term. We're going to watch all our companies in the short term to make sure they're on the pathway for growth and what we're looking for to go over the long term. And stay focused, build your portfolios, GVD, do all that stuff, baby, okay? Make sure you guys take advantage of that 4th of July sale before it ends. Early access is the pinned comment down there. And once again, when you join us in there, we'll send you Steel membership card to your house. It's beautiful. And, enjoy that in the future in regards to the product, the education portion of it, all the software, and all the future features we'll be adding in there as well. Definitely enjoy that. All right, guys, much love and have a great day.